In September 2023, Russia quietly seized a critical economic opportunity. It replaced the European Union in China's $3.5 billion pork market. What once seemed impossible, a nation banned from China's pork market for 15 years, has become a reality, leaving Europe scrambling to recover. How did this happen? And what does it mean for global trade? This is more than a shift in agriculture. It's a lesson in resilience, strategy, and the precarious balance of global power. For over a decade, the EU controlled the lion's share of China's pork imports. By 2020, European producers were supplying nearly 60% of the Chinese pork market, with Spain, Denmark, and France leading the charge. EU pork was valued for its quality, safety, and price competitiveness, making it a staple in Chinese households and businesses. But that dominance began to falter as new challenges emerged. Environmental regulations in the EU drove up production costs. A report from the Financial Times noted that energy prices and labor shortages further strained operations, causing pork prices to climb by as much as 25% in key markets. Meanwhile, China began prioritizing supply chain diversification, reducing its reliance on any single region or country. Compounding this were geopolitical tensions. Europe's reliance on high-cost farming methods and a complex regulatory environment made its producers less agile compared to competitors like Russia and Brazil. According to the European Pork Producers Association, export volumes to China dropped 34% in 2023 alone. The erosion of EU dominance is more than a temporary stumble. It's a wake-up call for an entire sector. Please like and subscribe. Leave your thoughts in the comments. Your support helps us grow. Thank you. The EU's September 2023 decision to impose tariffs on Chinese electric vehicles set off a chain reaction with unintended consequences, aimed at protecting European automakers from what Brussels called unfair subsidies. The tariffs were met with swift retaliation from Beijing. China raised import tariffs on European pork by 20%, and initiated anti-dumping investigations targeting Spain, Denmark, and France. According to Reuters, these measures slashed EU pork shipments to China by over 1 billion euros in just 6 months. A Spanish pork producer quoted in El País described the situation as an existential threat, emphasizing how the increased tariffs wiped out already narrow profit margins. This tit-for-tat escalation didn't just hit Europe economically, it exposed vulnerabilities in its trade strategy. The EU's ability to compete in agricultural exports, particularly in price-sensitive markets like China, has been severely undermined. China's anti-dumping investigations accuse EU pork exporters of selling below market value, a practice that Beijing argues distorts fair competition. These investigations have frozen contracts, delayed shipments, and threatened long-term relationships with Chinese buyers. Spain, once the largest supplier of pork to China, saw its market share plummet by 27% in 2023. Denmark, a leader in premium pork products, experienced a 19% drop in exports. France, while less reliant on pork exports, still faced significant declines, jeopardizing rural economies in regions like Brittany and Normandy. Rural communities are bearing the brunt of these losses. A Danish farmer interviewed by The Guardian said, "We're losing our livelihoods to politics we have no control over. The economic toll extends beyond farmers to feed suppliers, transport companies, and local economies tied to the pork industry." As the EU's exports to China dwindled, other countries quickly stepped in. Brazil expanded its pork shipments to China by 22% in 2023, taking advantage of its competitive pricing and proximity to Chinese markets. Similarly, the US, which had been sidelined due to trade disputes, re-emerged as a significant player, leveraging improved diplomatic relations to boost its market share. However, the most dramatic entrant has been Russia. After years of being locked out, Russia has capitalized on the EU's struggles to regain a foothold in China's market. According to Bloomberg, Russian pork exports to China grew by 38% in the past year, filling gaps left by Europe's retreat. This isn't just a shift in suppliers. It's a fundamental reordering of global trade dynamics. Russia was banned from exporting pork to China in 2007 due to African swine fever outbreaks and safety concerns. For over a decade, Moscow lobbied to regain access, and in 2022, it succeeded. Improved food safety protocols and rising Chinese demand led to the lifting of the ban. Russia's re-entry has significantly reshaped trade dynamics. Unlike European producers, Russian farmers benefit from government subsidies, allowing them to sell pork at prices up to 30% lower than EU competitors. Additionally, Russia's geographic proximity to China reduces transportation costs, further enhancing its competitiveness. A report by the Moscow Times estimates that Russia's pork exports to China will reach 200,000 tons annually by 2025. Valued at over $1.2 billion, this isn't just about price. Russia's strategic positioning as a reliable partner is redefining its role in global trade. Russia's strategy to dominate China's pork market is multi-pronged. The government has invested over $500 million in modernizing agricultural infrastructure, expanding pig farming, and streamlining export logistics. Russia's agricultural ministry has also introduced export incentives, such as tax breaks and subsidies for producers targeting Asian markets. These policies have enabled rapid growth in production capacity. According to Agro-Export Russia, the nation could meet up to 33% of China's pork demand by 2030 if current trends continue. Challenges remain, including scaling production sustainably and navigating international competition, but the trajectory is promising. EU pork producers face significant structural challenges. Environmental regulations, high energy prices, and labor shortages have driven production costs to unsustainable levels. A Reuters report revealed that European pork costs 20 to 40% more to produce than in Russia or Brazil. In contrast, Russian and Brazilian producers benefit from lower regulatory burdens, cheap feed, and government support. For Chinese buyers, the decision is simple. Why pay a premium for European pork when comparable options are cheaper? This pricing gap underscores the EU's struggle to compete in an increasingly price-sensitive market. China's agricultural strategy has pivoted towards sustainability and self-reliance. After African swine fever devastated its pig population, Beijing launched initiatives to rebuild domestic capacity while prioritizing eco-friendly practices. These policies are already bearing fruit. According to the South China Morning Post, China reduced its pork imports by 14% between 2021 and 2023. This shift aligns with broader goals to localize food production and reduce carbon emissions, forcing exporters to adapt or risk losing access to the world's largest market. The Belt and Road Initiative, or BRI, has transformed Russia-China relations. Through BRI infrastructure projects, Russia has developed new trade routes and logistics hubs, enabling faster, more cost-effective pork exports to China. This isn't just about agriculture. The BRI has deepened economic and political ties between Moscow and Beijing, creating a partnership that extends beyond trade. As the European Union struggles to maintain its influence, Russia is leveraging its strategic alignment with China to solidify its position. European farmers are facing a perfect storm. Shrinking market access in China, rising production costs, and increased competition from lower-cost suppliers threaten their livelihoods. According to the European Agricultural Council, up to 50,000 rural jobs are at risk if current trends persist. The economic ripple effects are profound. Regions heavily dependent on pork production, such as Catalonia in Spain and Jutland in Denmark, could see GDP contractions and long-term economic decline. This isn't just about trade, it's about survival for many rural communities. In an attempt to de-escalate tensions, the EU has proposed lowering tariffs on Chinese EVs. While this gesture may ease some friction, experts like trade analyst Sophie Mounier argue it's insufficient to restore trust. China's focus on diversification and cost efficiency suggests that its trade relationship with the EU is undergoing a long-term realignment. Without addressing structural issues like pricing and sustainability, Europe risks losing more than just its share of the pork market. Russia's success in China's pork market offers valuable lessons for the EU. Strategic investments in production efficiency, competitive pricing, and geopolitical alignment have allowed Russia to capitalize on Europe's missteps. Is it too late for the EU? Not entirely. By embracing sustainable practices, reducing costs, and rebuilding trust with Beijing, Europe could regain some lost ground. However, the window of opportunity is closing quickly, and complacency is no longer an option. The EU's decline in China's $3.5 billion pork market isn't just a cautionary tale. It's a pivotal moment in global trade. Russia's rise, China's diversification, and Europe's struggles signal a new era of economic power shifts. But this story is far from over. Can the EU adapt, or will it lose ground in other critical markets? And what does this mean for global food security? We're glad you're enjoying this video. Please like and subscribe. Check out another video that is now on your screen.